Welcome to another episode of Straight Talk on Stocks with Kevin Hurley, Managing Partner of Hurley Investments LLC, and Jeffrey Dunyan, CEO and owner of Safe Option Strategies. Good morning, Kevin. How you doing this morning?
I'm doing good. Look at this market come back.
Better
Apparently
day.
Morgan Stanley cannot bring it down.
Was it yesterday or the day before you were super pissed off and we had to end the presentation trying to find something to be positive about?
Doesn't
matter.
every day?
Doesn't matter. I'm just messing with you.
Well, pretty interesting. You know, we've had a couple good days. Morgan Stanley didn't have a good earnings event, so are we seeing some profit taking from some good days? Can Morgan Stanley really bring down the market, and the buy the dippers are going to run away because of Morgan Stanley?
Who knows? Morgan Stanley, they're a big enough name that I think they have that ability to drag things a little bit. I mean, they're not a Dow component. They don't. They really, from that perspective, they don't have the ability to be a drag on the Dow, obviously, but they can certainly be a drag on the S&P. They're still a pretty large cap company in terms of their market cap. But there's also a report came out this morning also about weekly jobless claims. Let me see. I've got it here on the screen. I'll circle for the people that are watching the video.
They came in at 213 instead of 220, better than expected. Right,
and you're back around. You remember we had all those years where good news was bad news for the stock market, bad news was good news for the stock market, and it was all due to interest rates. If there was a really positive economic report that came out better than expected, everyone worried about interest rates going up. If there was a report that came out and it was bad, everyone was, hallelujah, interest rates will go down, or at least they won't go up. And you've got some of that has without a doubt crept back into the market. There's no getting around that. So I think it's a combination of Morgan Stanley. Three things. Morgan Stanley is one factor. Some profit taking, like you said. We've had the Dow's up 5% since the start of the year, 4% since the start of the year. And some people are looking at that saying, man, I took a 5% beating last year. I got to get something back. And so they see a 5% gain this year, and they're like, I'm going to grab. I'm almost back to break even, or I'm almost net zero on this. And they got to get back. So I think that's some of it as well. So the three things: Morgan Stanley, the interest rate thing, and a little bit of profit taking. And the Dow right at the open, we're only what, not even 15 minutes into the open of the market right now. And the Dow dipped 112 points right at the start, and now it's down 50. And who knows? I mean, by the end of the day, it could be down 300. It could be up 700. I mean, you never, this early in the trading day, you never know what's going to happen. You never know what direction it's going to get pushed. But for right now, it's 52 points. If it ended right there, 6 hours from now, no one would care. 52 points, and people would be saying, not a big deal. That's a flat day in the market.
True. There were some mixed earnings today, some downgrades. China's going to pump $82 billion into their banking system.
Yeah, they just print money.
Some news here. Maybe people are just waiting for Netflix Day. Maybe it's going to be a flat day so we can see what Netflix does. I think Netflix is now a bellwether in the NASDAQ.
Well, yeah, and I think it's been a bellwether in the Nasdaq for a while. It's a volatile stock. When Netflix misses, they go berserk. Let me pull up a chart of Netflix. We're going to talk about Ford in a minute because I have a trade that I'm going to talk about on Ford. But yeah, I mean Netflix. And let me even expand out beyond just this last 6 months. Go back a couple years. Let's go back a few years. Netflix, if you know, now this going out 3 years almost distorts it in a way because you lose a sense a little bit of how big some of these moves are. You just look at it over 3 years and you think, wow, what an incredible growth stock. You're talking $80 a share back here, and you're talking 420 here in a span of about 2.5 of those 3 years. But these moves, right? These are big moves.
Yep.
This is a move from 100 up to 140 in a couple of days. Um, this most recent miss on earnings, well, even just this last 8 or 9 months, they peaked out at 420. They've got down as low as 240, almost 50% in this 6 month stretch right here. That's a volatile stock. That's a big moving stock. We talked about this on a program a couple of days ago. There are some people that think if Netflix was bold enough to announce a price increase 2 or 3 days ahead of their earnings, they must know that those numbers are going to blow people out of the water. And people are going to be looking mostly, they'll look at revenue, but they're mostly going to look at new subscriber growth. That's where the focus is going to be.
Right.
US and international subscriber growth.
Again, we've talked about there are a lot of stocks that have lost 40%. You can do Apple, you can do Ford, you can do Baidu, Bank of America. I mean, there are a lot of stocks that took a 40%, 35% hit last year that are cheap, are good buying opportunities right now. You know the old saying, right? In the stock market, when everything goes on sale, everybody runs out of the store.
Yeah. Well, there's 3 years. 3 years, and the highest Ford has been is $12.50, and you're predicting they're going back up to $23 a share.
That's right, minus 10, 13 it is.
I tell you, I would love it. Ford reports next Wednesday, and we'll talk about it more between now and then. But next Wednesday is when they report, and with their weak guidance that they reported the other day, which I don't know. Let me, okay, side subject here. Why the hell do they come out a week before their earnings and make a guidance statement? Shouldn't that be part of the earnings conference call?
It should, but if it raises their stock price, I'm all for it.
It didn't raise their stock price. It tanked at 10% in the last 2 trading days. They're down another 3.5 cents today, which by comparison is nothing because it's less than 0.5%. But they shed 7-8% yesterday and 5% the day before because they came out and made a guidance statement a week ahead of their earnings. What the heck?
Well, that usually doesn't bode well. It usually means they're going to miss. If they pre-announce, it means that they're going to be in trouble.
So do you try and trade Ford going into their earnings? I like earnings plays. I'm a fan of doing things to take advantage of earnings, provided you understand how to be non-directional, or you're trading illegally with insider information. As long as you've got one of those two things on your side. I mean, hell, I don't think Martha Stewart should have gone to jail. I think she should have got a medal. She knows what's going to go on. Take advantage of it. Buy some more stock.
Well, I was going to tell you, I like Ford. I like Ford here. This morning I picked up 1,300 shares, and I added a February 22 long put in case I'm wrong. The shares will go up from $8.32. I've got the right to sell it at $8.50. Only cost me about 55 cents. So I'm in a trade where my cost basis is about $8.95. If it goes up to 13 like I'm predicting, I'll be in good shape.
You predicted 97 that it would go up to. Okay, so really quick, I'm sorry, I can't help but just continue to mess around with it. Okay, so you picked up shares of Ford and they're trading around 825. Let's help people out here. I'm going to put this on the screen, but obviously a lot of our audience is listeners only. So you bought shares of Ford right in the neighborhood of $8.25.
Yep.
You added to that 55 cents a share approximately for long puts.
Correct.
So your total cost into Ford is $8.80.
76 cents ish is what it came out to be.
Okay,
$8.80.
so you got the stock a little bit better. $8.76 a share is what you're into Ford. But that's got to go up more than 55 cents to overcome the cost of those long puts for you to see profit.
Correct. My cost basis is $8.76.
So you've got to see Ford go somewhere in that $9.25 to $9.50 range Somewhere between 925 and 950 is where you start to make profit. And that's actually a good spot. I think if they get, okay, so that leads to a follow-up question. I think they could hit that if they go up. I think between 950 and 975, they stall out just on some technical resistance. Nothing more, nothing less. Doesn't mean they can't push through it, but I think they stall out a little bit at 950 to 975 based purely on technical resistance. So the next question becomes, what do they have to do? What does Ford have to do to have an upward movement? They screwed up, in my opinion, big time. Well, okay, even as I say that, I'm gonna retract a little bit. I don't like it when companies announce earnings related information ahead of the earnings report. I'm one of these guys that's of the opinion that they ought to get smacked down really hard by the SEC when they give earnings related news ahead of the earnings report. Because when they make those kind of announcements, it takes away a person's ability to be prepared for an earnings report. It takes away my ability to be prepared for an earnings report.
I could see that. In all honesty, Jeff, I looked at this trade as not what I could really make, but my risk to reward. And my risk is really 30 cents.
Because you've got an 850 strike. You've got an 850 strike on the puts. So with an 850 strike and your cost at 876, you've only got 26 cents at risk if Ford falls to the downside.
Yeah, I calculated a little bit more. I calculated at 30 cents, but yes, I mean 26. Actually, it is 26 cents. 26 cents and 26 cents times. Let's do some math here.
Okay, while you're doing your math, let me circle back to my other question that I started before I distracted myself. What does Ford have to do to get upward movement following their earnings after they already broke the news that they suck on their guidance for the whole rest of the year? And that cat's out of the bag. How do they get it back in?
They just have to focus on the fact that they are cutting costs, that they are moving over to their F-Series trucks and dumping the cheaper, non-profitable cars that they have.
They've told us all of that. So what? They're just all they can do is reiterate that. That's not news that we're waiting to hear if they're doing. That's news they've already announced.
Well, probably the best thing they could say is that they just sold, 1.1 million Ford trucks as their number one selling car last year out of this, 17.5 million total cars sold last year.
Okay. So I guess what I'm really wondering is, after making this pre-announcement yesterday about their guidance, I don't have the optimism I might have otherwise had that they're going to hit good numbers and go to the upside.
I think they'll hit great numbers. I think their guidance, because they're trying to sell into China, will not look very good. And that'll be the issue. Are you going to look at their numbers and wait for a China tariff agreement, or do you expect better sales out of the U.S. consumer throughout the next year? I'd buy another Ford truck.
Well, I would too. If I had the cash laying around, I'd go buy a fleet of Ford trucks, all for me. I have a Ford truck. I love it. I'm jumping in when we're finished this morning. I'm jumping in my Ford truck and I'm heading up the mountains to go skiing today.
Good for you. I'm jumping in my Ford truck and I'm going to Vegas.
Fantastic. We mentioned Ford often enough. They're going to send us each a new truck for our shameless plugs on Ford.
They should sponsor us on this podcast. And this podcast is brought to you by Ford.
Kevin, we only need 10 million more followers for them to sponsor us on the podcast. We're only 10 million followers shy. Okay, so I've got my trade. The trade that I'm looking at is a little bit different. The volatility of the market overall, and Ford specifically, and some of the issues that they're having, I think this is a low price stock right now, and I think down in this $8, $8.25 range, they are a value. They might be able to say something to push forward, and if they give some kind of positive news, They could be at $9 a share in a blink. They could be at $9.75 pretty easily before they hit a hard resistance wall. And they and like your myopic view, they maybe I'm wrong, and they could push up to $300 a share in the next month. What was the number you? Anyway, I'm looking right now. They report on Wednesday. A week and a half after that, the February 8th expirations, an 850 call, 850 put straddle is only 73 cents a share right now, which means that from the 850 mark, from that spot at 850, they've either got to go up 73 cents or down 73 cents. So you do the math. That means at 925, I'm break even to the upside, and at 775, I'm break even to the downside. And those are both a little bit past their levels of resistance and support, respectively. So the only thing that could just really suck is if after that earnings, over the next week and a half, Ford could not get out of a
trading range.
If they could not get out of it's a dollar range, because whatever the range is, they've got that range between 925 and 775. So I guess a $1.50 range. If they get, and for an $8 stock, a $1.50 range is a pretty good percentage size range. They've just got to find a way to break out of that. This is the type of trade that I would open it now while the implied volatility has not gone through the roof on these options. The implied volatility will go crazy on these options over the course of the next week leading up to earnings. When you get to Monday and Tuesday, you're going to pay more for this. Even if Ford is still trading at 825, you're going to pay more money for the exact same trade.
Definitely.
So I wouldn't get into this trade on Friday. Well, tomorrow's Friday. I wouldn't get into it on Monday or Tuesday or Wednesday at the open when Ford's going to report after the market closes. But I got the mid price on this trade right now at 72. In fact, I personally, I'm pulling the trigger on some contracts right now with a 75 cent per share limit price. And I'm jumping in. And I've already been filled.
Makes sense. I mean, if it stalls out 75 cents lower at 750, which is its low point,
and I got filled.
Don't lose any money, you'll be in good shape. If it gets up to $9, the numbers really work out well for you.
I got filled right at the 75 cents. Now, I'll also say this. This is a trade that if Ford, and I'm a little bit worried they're going to have a mixed report. My concern is that Ford is going to have a mixed report. They're going to hit some impressive numbers, but because of what they've already given on this guidance warning, I am a little bit concerned that they could get stuck in neutral right there. And if they do, it's as simple as this. If there's a slant to the upside, because neutral is rarely a perfect horizontal line. Neutral is far more often it's slightly to the upside or slightly to the downside. Depending on which direction it is, I close the option side that's losing and then maybe add a short option to the other side. Not with the expectation that I'm going to get profitable, but just to cut the loss way, way down on the trade.
Nice to be able to adjust or fix losing trades, isn't it?
Yeah. All right. So in the time we've been talking, and I didn't pay attention to when we started, so we're at least 20 minutes in right now. The Dow is now only down 17 points. NASDAQ and S&P have both moved into positive territory. Ford is trading flat. Bank of America is flat to slightly up. And I thought Bank of America would have a little bit more of a sell-off this morning, just purely for profit taking. Looks like people are pretty neutral on Bank of America right now.
Yeah. Looks
I've
good.
also got Nike. Nike's up $1 a share today. What's the bug that got into Nike's butt? They've been on a nice little tear lately. I don't think we planned on getting into a conversation about Nike, but
I trade Under Armour more than Nike right now.
I trade them both.
And Under Armour's at its top of its range, up 29 cents at $19.90 right now. It has earnings coming up here in the near future
Look at this tear Nike has been on. Nike dropped down to $68 a share on that horrible week leading up to Christmas, and they're back over 78 a share. I mean, a $10 move per share on a $68 stock. Nike itself has had a 15% climb. I had to grab my calculator to do the math on that. Nike has had a 15% climb in 3 weeks.
Go Kaepernick.
I think Kaepernick's a moron. I think it's retail show. And look, hey, I trade Nike stock still, but I've stopped buying Nike products. When they no longer have Colin Kaepernick as the face of their company, I may go back to him. But to me, that was a Bush League moronic move. It's paid off for him, which is a sad statement that it paid off for them, because you could not pick a worse role model than a piece of crap like Colin Kaepernick.
No kidding.
Straight up, that guy's a moron. Straight up, he's an anti-American moron. I'd say, Kaepernick, you're in the only country where you wouldn't be put to death for what you're saying and doing against your own country. So way to go, way to thumb your nose in the face of the freedom that allows you to do it, you moron, you ingrate piece of crap, hack football player wannabe. You and Jim Harbaugh have a special room in hell next to each other. Jim Harbaugh for what he did to Alex Smith, and you for being a piece of crap.
Ooh.
I used to be a 49er fan when I liked the NFL. That organization has done so many moronic, stupid things that I am no longer a 49er fan. Even if I come back to the NFL after Roger Goodell is dead and buried, I'm not going back to being a 49er fan. That's for sure. Anyway.
Raiders are in Vegas. New stadium being built. You can be a Raiders fan.
Yeah. Have you seen where the stadium's being built?
I have.
By the way, I'm not going to be a Raider.
Later on today to check it out.
Yeah. And then just FYI, I'm never going to be a Raiders fan. I have more intelligence than that. And I just alienated a third of our audience. All right.
Come on, Raider Nation, make a comment. Subscribe down below and make a comment to Jeffrey.
All right. Anything else you want to talk about? I know this is going to be a little bit shorter this morning because you're hitting the road for Las Vegas. I'm going to do a few things to make sure business is well, and then hit the roads for the slopes today.
You just might want to remind listeners, we have, in all honesty, we have options expiration coming up tomorrow, the monthlies. So it's going to be a bit of a, I don't know, you just say it's a bit of a wait and see day today, and repositioning tomorrow for earnings that are coming up, repositioning your protection, repositioning for the uncertainty of the future, and it is what it is.
Okay. Let me ask you this question. You and I had a conversation last night, pretty optimistic, in fact, an incredibly optimistic conversation. Do we want to wait and tease a little bit and say that next week we're going to make a huge announcement, a massive announcement that relates specifically to Safe Option Strategies and Hurley Investments, or do you want to let a little bit of that out of the bag now? I think we tease it. I think we tease it.
Subscribe below, become a subscriber so I can make an announcement on Monday or Tuesday.
Let's tease it out for a big Monday announcement. When do you get back from Vegas?
Well, it depends how my kid does. He might have quarterfinals, semifinals, and finals on Monday. If his team blows it, then I'm golfing on Monday.
Okay. So you're not. So we'll be doing the podcast with you in Vegas on Monday. Let's put the tease out for Tuesday.
Sounds good.
When you get back Monday night, give me a call when you get back Monday, or if whatever your schedule ends up being. Let's finalize how we want to roll out there. But we have this is a huge announcement for Hurley Investments and for Safe Option Strategies. It's big. This is some cool stuff.
Could it be a new product? Could it be a new stock? Could it be Jeffrey joins Raider Nation? We'll find out.
Bigger than any of those things, and way more probable and likely than Jeffrey ever joining Raider Nation.
Bigger than both of it. So could it be Rosie O'Donnell? She's bigger.
We're going to have Nancy Pelosi on the show, and she's going to explain to us how she lives with herself, how she looks in the mirror every day and doesn't run with fright over what a hypocrite she is and what a political hack she is. So maybe there's that to look forward to.
Sounds good.
All right, Kevin, drive safe. The roads up here, at least on the northern part of the state, the roads are a little sketchy. Be careful, have fun. Good luck to your son. Kevin's son is playing in like the biggest soccer tournament in the world, for, outside of the world, next to the World Cup. This is like the biggest 12-year-old soccer tournament in the world. And Kevin's son is the star of the team, and
he's a bit of a phenom, and his team was actually asked to play some.
And he dominates them.
He does, but we're playing Mexico, so he's in a.
This is bigger than the World Cup. Then I didn't realize you're playing Mexico. That means this is bigger than the World Cup.
Number 3 team in his age group in Mexico is probably going to thump the what out of my kid's team tomorrow.
Nah. Your son's a rock star when it comes to the world of soccer. He's going to do phenomenal. All right, let's sign off right there. We both got things to get to. Hope everybody enjoyed it. Tune in, subscribe. Our membership is growing already. It's fun. I'm having a blast doing the podcast. This has been fun.
Sounds good. See you tomorrow.
All right.
And
thanks, Kevin.
Go surf. It's Surf PC is my kid's soccer team.
Okay. All right. I told you I was skiing, and all of a sudden you're saying go surf, and I'm like, what the crap are you talking about? All right. We'll end right there. Thanks, brother.
Have a good one. Talk to you later.
Bye.